We have a great panel, as we usually do. This is the last session, so we'll have some fun. I think you know everybody here, but for the sake of time, I'll go really quickly. Cameron Taylor from B of A, Susan Orr from Claris Bio, Andrew Gitkin from Leerink. Just want to make sure nobody else came in instead of you, Andrew, that's all. Just want to make sure it's you. And Anupam Dalal from Acuta. So let's just talk about something that is on everybody's mind but has not been brought up in this meeting, surprisingly. RFK. RFK, all right? What the heck is going on there? So other than bears in Central Park and whales in New Hampshire, I don't know who's more nervous than biotech. Is that justified? I mean, we've been crashing for the last few weeks. Susan, why don't you kick it off? Is this like just a blip, or is this real? What's going on with this RFK deal?
So it's not real yet. He hasn't been confirmed. But I think right now it's all speculation, conjecture. We know that there's been a lot of radical statements made, both when he was a presidential candidate, as well as more recently with his appointment. I think that there's two sides to this. One is the health of Americans and whether we're concerned about the intervention that he is promising with FDA processes and the regulatory approvals of new drugs, vaccines. And then the second part is, how does it affect the approval of new drugs and the launch and marketing of new drugs, and ultimately then the investment from into the companies? And we don't really know. If there's less regulatory restrictions, maybe we have more drugs approved. I think that this is a wait and see, and speculation's fun, but we're not going to be able to predict, because that's what's predictable, is the lack of predictability.
So, Andrew, I know, jump in anytime, by the way. This is a discussion. This is not a panel. It's a discussion. So, Andrew, you live in Southern California, so I know for a fact you drink raw milk and you get chelated on a regular basis. So what are your thoughts on this?
Is that obvious? I mean, I think it's a great question. I think it was last week you saw the biotech index down, I think 15%. Actually since the election and since RFK's name, came into the fold, and also, Jerome Powell's comments with respect to maybe a slower pace of interest rate reductions. I would point out the last time the index was down that much in a week was when Hillary Clinton had that famous tweet about pricing, and so there's real concern. I will say, just in sort of hierarchy, I think our industry responds more to interest rates. Okay, and we saw that recently than RFK. I would also point out that the FDA, most of the funding, at least half of it, comes from user fees. So the fact that it's self-funded, I think, insulates it a bit more. So I think there's some headline risk, but at least from my perspective or our perspective, we don't envision much of a change happening with respect to the pace of approvals. If anything, I can make the case that maybe things get a little more lax, which would be nice.
And that's a good thing, right, Karen?
It's a great thing.
It can be a good thing, but it can also backfire, right, in some ways. And I think we want the FDA to be rigorous, and we want to make sure that patients have safe therapies. But then I think, Susan's absolutely right that there's a lot of speculation, right? It's also not just RFK. You're going to have other folks involved. Actually, Vivek had a tweet quite recently talking about his own discussion with RFK, and that's still speculation. But I also appreciate what Andrew mentioned about interest rates. Given my own personal background, I think that's a focus that sometimes we ignore. But it looks like, right, we could be in an inflationary environment still where that's not quite kicked, and that has a huge role in starting new companies and making 20-year bets on assets. But I think as we look through collectively the things that you see the volatility in the market around, it's just that lack of certainty. And I think there will be a huge focus on everything that happens over the next few months across all of the different appointees, because it does seem clear, right, that there is a desire to shake things up, and how that impacts the industry will be very important.
Yeah, I'm just waiting to see where Hulk Hogan ends up. Anupam, have you changed the way you invest?
Yeah, I think, first of all, I agree with the general sentiment that there's a lot of panic right now, and history suggests whenever this is happening, you go the other way. And it's not going to be as bad as we think. But that being said, there are some things that are happening that are like unequivocally bad. Actually, before I get there, I mean, I think the FDA commissioner proposal was a huge positive compared to what it could have been, and I anticipate that Dr. Macri will be more of a conventional commissioner that's really not involved with day-to-day reviews of NDAs, et cetera, or INDs for that matter. So that, I mean, compared to what hypothetically could have happened, I think that's a real positive. But I think what's concerning for us, and I think this actually led to some trading even before the election actually occurred, was that while there are certain cartoonish characters potentially in the senior ranks of the Trump proto-administration, there are some very capable and serious people on the ground that are competent at executing various goals that are put out in front of them. And some of those goals are dangerous. Like, we know for a fact that the administration is evaluating whether they can pull FDA center directors and even division directors into Schedule F. Now, why would they want to do that? It's not, I mean, I don't think it takes a rocket scientist to anticipate where that's going. The legal research that's happening in DC around what they can do with vaccines, so this is not just a rhetorical thing or anti-vax comments. Some of the maneuvers that they are actively researching regarding pulling recommendations for vaccines surgically is real. So I would not anticipate. We can, RFK is kind of a colorful character, but there is depth lurking beneath the surface there around some of these objectives. So it's definitely impacted how we're investing.
So all of our friends over here, most of them by far, are small companies that are doing fantastic work, innovative work, disruptive work. And I feel that there's a bit of a catch-22 here. And this is where, and I really want, and I'm just going to throw this out, and I want all of you to answer, but just answer in any order you want. So I'm hearing that, look, there's going to be a change, whether it's RFK or not. There's going to be things that are unstable. And in times of instability, people tend to get a lot more conservative in doing deals, right? And they want to take the risk off the table. So now you've got a bunch of our friends here sitting doing disruptive, innovative work, but yet people are going to be pulling back in this time of instability and saying, I don't know that I'm necessarily going to want to risk for an early stage disruptive thing, no matter what they say, and I want to wait until things are de-risked. Doesn't that put our friends over here in a real catch-22, kind of a real bind coming up?
I mean, I would come back to, again, for earlier stage companies, as we were just talking about, Cameron, I think a lot of it comes down to access to capital and interest rates. And so irrespective of RFK or some of the policies, I think innovative ideas and the ability to fund them continue to be sort of just a very simple function of where rates are. And the reality is, for the last several years, and I think we talked about it on the other panel, it's been very difficult for private companies to get funded. And so, I mean, to some extent, I have a little bit of a concern that has already been somewhat of an innovation sort of gap, if you will, a pause, because good ideas have had a harder time, getting funded. And hopefully that changes in the year to come. With respect to, and then if you look at sort of development cycles from sort of idea to approval, that's going to take longer than this administration. And so it depends on sort of where you are in sort of the continuum in terms of how much this might be an impact.
But I guess I am encouraged, though, by, I think, one of the underlying things that I like. I actually had this conversation with someone debating if they should do biotech banking. And I said, look, if our clients meet unmet medical needs that are absolutely known that they are improving care for those patients, and certainly in the US, I don't think that the infrastructure is going to change so much that those companies that have a step change are not rewarded. And so I do think there's an element of making sure that as companies are going through their development plan, they're playing to win, not playing to play, and figuring out where they fit into that treatment paradigm so that that's a no-brainer to say, yes, I need that therapy for my patient. There's a pull as opposed to a push. And so I think that's going to be there for a long time. There's still other elements to navigate, We have to think about, right, what diseases, and how will Europe look at things, right, to make sure that you have a global opportunity for drugs. We've seen that in GA, where there's been a little bit of a difference between how the FDA and Europe looks at it. So I think those are areas where there's still actually a lot of opportunity because there are still patients that are going blind or patients that are uncomfortable, and this is beyond just ophthalmology. I see that as a really nice tailwind.
So Susan, I hear what Cameron said and what Andrew said, but they're sort of taking a little bit of more of the strategic perspective. But if you're a small company and you've got technology that you're building here, and you get a choice, say, between taking a riskier path, a disruptive path, high risk, high reward, and something that may be incrementally different, but a lower risk, lower reward, would the coming environment change your decision making?
Yeah, I think I agree with my colleagues. Anyone who's been out there walking the streets, doing the JP Morgan dance, looking for money, knows that some years it's a lot easier and some years it's not. So these natural tendencies, up and down, interest rate related, they already exist. So this is one more variable that's coming on top. When you look at the way people are funded, you look at the science, you look at the market opportunity, and you look at the leadership team. And I think all three of those will continue to be evaluated. And your question is, well, is the risk on the science part, a greater risk on the science part now going to push you to the back end of the funding line? And I don't believe that's true. I think it's the overall environment of funding. Last year at JP Morgan, everyone was super happy because so many deals had been done in, 3 weeks before that. And then we went into, several months later, the environment changed. Not related to the presidential election, not related to RFK, just a natural cadence to funding. So from my perspective, I think incremental innovation is redividing the money that's already in the market, it's already in the space, you're just shuffling it between companies. And the breakthrough innovation is where you're going to make the biggest differences. And that's where I want to be. That's what's exciting, and I think investors see that.
Anupam?
Yeah, I mean, just to make it really practical, I got enough problems, figuring out whether the technology is even going to work than sort of factoring in the political macro thing. So, I don't anticipate that really, this sort of uncertainty directly changing what we're doing in that sense. And I agree with Susan that, in general, the worst things that we've ever done have been low-risk things because the risk-reward is embedded in that, and there's a very narrow margin for success. So I don't anticipate that there'll be a secular shift to low-risk ideas.
So, I hear you, but let me just go back to what Susan said. It has been a little bit disappointing, though. We're here last year, and we were all really happy. There were deals that were done. We thought there'll be a whole bunch more deals done. We didn't know what was going to happen in the administration. The Bears didn't either. The Whales didn't either. But we didn't either. And now all of this has happened. And in this last year, nothing has really happened. Has the way that the strategics see us changed a little bit? Do they look at us and say, look, there are really no billion-dollar opportunities in ophthalmology. It's so fractured. There's so much competition now that maybe there'll be an incrementally better thing. But are they looking at us saying, there are no billion-dollar opportunities, the heyday is gone? Or is that too pessimistic?
I'll jump in there. Having had a lot of experience on the pharma side, looking at opportunities on the other side, and now being on the other side, I think it's not so much the level of innovation that is the decision-making factor for strategic partners, and the last panel spoke to this to some extent. It appears that the movement is just later-stage assets to decrease risk, as opposed to the market opportunity or the degree of innovation. So I think for strategics, the challenge is, I think it was Shannon was saying that they develop the relationship early, but the deal happens usually not always, when the data comes out, when it's robust and the probability of success goes up. So in the absence of that culture changing, being able to protect programs they partner with earlier so they don't get brought into the bureaucracy of decision-making and changing strategic plans every year, it's going to remain later, but not based on the degree of innovation, just based on risk by stage of development.
Yeah, I think there's a couple of things. One is, I think there's only like 4 or 5 blockbuster drugs in ophthalmology, and I think 3 of them are basically VEGF. And there's like 150 or so blockbusters, regardless of therapeutic area. So to some extent, we have that as a challenge as an industry, which is either we accept that as fact, and this becomes an industry of the singles and doubles, and that has implications for sizes of company and where market cap goes, and it has implications for deal making, like what's going to move the needle or not. I personally don't believe that. I think there's some great science being done both at public companies, but also very notably private companies, where I think hopefully we change that and we develop more blockbusters, and that's sort of the challenge, and that's the opportunity for all of us. And it's great to see folks even at like Glaukos who have, I think, a much more expanded view of what they're working on and can bring capital to bear, and others that are here in the room as well. So I remain optimistic in that point. Just to go back maybe 2 questions ago about iterative versus something being more significant. First off, it depends upon what is sort of an incrementally better, because it may be scientifically incremental, but if there's something else about that the patient experience is meaningfully better, it's de-risked, but there's also potentially significant opportunity. And so I think there's subtlety to that. But my advice would be to sort of the startup companies in the room, no matter what path you take, make sure you're funded to do it completely and correctly right, and don't cut corners, because what might seem like a small corner to cut now, at some point, the smart folks in the room, the strategics, they're going to figure it out, and you would have ended up wasting a lot of time and money.
Absolutely agree with that. And then the other element, and Tomas, special shout out for taking some risk on earlier mechanisms. But in general, the strategic community in this field for the past decade has been more conservative and acts on a later stage of development for more sizable deals. You look in oncology and immunology, where pharma tends to go a little bit earlier than many other therapeutic areas. This just happens to be one where people have a high bar. There's maybe a benefit, or looking across the table with a strategic saying, maybe I hope they don't move so that I don't have to move, so that I see that company get to that data that Andrew's talking about, right? And having something that's a clear win, and then they say, you know what, I'm fine. I'm happy to pay for that, and I'm happy to take that growth, but I don't want to have that risk of something blowing up in my face.
Makes sense.
Yeah, and Pravin, just come back to your original question. I mean, I'm not disappointed by 2025 in terms of deal making. I think the deal making substrate, is different in every year. I mean, I think 2026 is going to be a huge year for late stage readouts in Retina, and that's going to be interesting. But I mean, for example, if you just think about, if someone said, is there a company, a biotech, a retina company, a publicly traded retina company that has actually traded down because of there was an expectation it would get acquired and it didn't happen? I don't know what that company is. I'd throw it to you guys. I don't think we have one in 2025. And partially that
2025.
Yeah, 2025.
We've had rumors of others, but
yeah. But I mean, but 2025. I think next year, right? With Ocular, Opthea, Aviceda. There's a lot of very important data sets that are going to come out next year, and then I think it becomes an interesting. We'll see if Andrew and Cam can actually do their jobs next year. But hopefully, knock on wood, we'll see what happens.
It's all their fault, quite honestly.
Always blame the banker.
There are some diseases that are used as barometers for the rest of the group. So let's just talk about 2 diseases: wet AMD and geographic atrophy. Wet AMD. Now we've got a whole bunch of different things coming in there. We've got a biosimilar, or a veritable biosimilar with Amgen. Is that going to change the field? Is that going to mean that everybody else is sort of like be locked out because now we're just like racing to the bottom or anything like that? Or is that something that's not going to change the field and everything else that people are doing in wet AMD?
So it'll be interesting to see, right? Because you still have an ongoing battle between Regeneron and Amgen. Amgen said pretty forcefully that they're just going to go ahead and plow forward. Historically, all biosimilars have launched at actually a higher price. And so we haven't seen the field jump into a change in price, and that leaves things quite favorable for the rest of the brands. And I think that opens up the field pretty substantially for new entrants that are delivering something that is uniquely different, and that are able to make a claim to say, this is why I'm better than what's going to be there. And there will be, a question of, does economics take over in terms of the number of assets that are introduced? Thus far, right, the signal would be is higher price, makes a difference. You also saw, right, on the compounding side, Pine got out of the business, right, which would be another low-cost provider, and so that also plays a role into how this market evolves. So it's going to be a really interesting, I think, 2025 to see how that plays out, in addition to the data that we'll see come in the field.
Yeah, I agree with you completely. I think that there are a lot of products that have come to the market, and the biosimilars are one more, but they're sharing the market. They're not growing the market right now. In order to grow the market, efficacy is king. You need better efficacy, or you need better outcomes long term. And just disclosure, because I'm on the board of Opthia, but that company is going after superiority. That can grow the market. The companies that are going after longer duration, we all know how many intravitreal injections there are in years 4, 5, and 6, and it's not a lot. So if you can continue to treat the patient with long-term delivery, you can grow the market. So I think growing the market is what we'll learn next year, and that will change the face of the AMD space, or actually at least maintain the space as the former entrants are still working to divide up the current market.
So let's switch to GA. We've got 2 drugs that are approved. Again, another barometer type target, Izervay and Syfovre, and the estimates have been reduced significantly for both, for different reasons. There are lots of companies here that are going after GA and dry AMD. There's some phenomenal innovative technology. What's the deal with the market? Is the market a lot smaller than we thought? Was everything that was said just sort of a bit of a rouse there, or what's going on with the market, and how are the strategics going to look at the GA market given what's happened with those 2 drugs and react to the smaller companies here that are doing some really fantastic innovative stuff?
Wide open.
I'm sorry?
Wide open. Hunting season for emerging biotechs.
Wide open. All of GA and all of dry AMD.
All of GA.
All of GA.
Yep.
So
Doctors want
this
something different.
decrease, the estimate has no meaning whatsoever, no negative impact whatsoever.
I personally don't think so, and I think there was an interesting panel, right, at AAO where they paneled the audience of how many docs are on the sidelines, and there's a lot on the sidelines, a lot of patients on the sidelines. My father-in-law, right, actually had early dry AMD that was noticed, and his doc kind of goes, well, not sure that you need something. Are you really going to show up? You're healthy. Is it really going to mess with your day? And he said, no, it's okay. If it gets worse, maybe we'll think about treatment. But that's an example, right? That's an N of 1, but I think it's very clear based on the data that there are a lot of folks on the sidelines, and I think that that's a huge opportunity because there's just so much more awareness to take that market, and I think that is a great opportunity to create value in this field.
Good. It's good to hear that huge market was just not a tail to sell a company.
I would just say, real quickly on that point, this is why investors short the launch, because I can't think of any launch where expectations were met or even exceeded. You typically miss. Yeah, that's true. It's one. They tend to miss them, and so I think. So I'm not terribly surprised that the launch maybe underperformed, and I agree with Cam. I think the market continues to be wide open.
Yeah. I would draw everyone's attention, though, back to the launch of anti-VEGF. They made their first year one target within a couple months of launching the drug. I think that looking at the GA drugs right now, there's no wow factor. The patients are coming in for an injection every month. They're not seeing a benefit. I think it has a lot to do with what the drug is and the degree of efficacy. So I agree 100%. It is wide open for innovation. Different delivery, less burdensome to the patient, and better efficacy. All there, all waiting to be tapped.
I know we have a few minutes, but I want to end. Anupam, anything else on that you want to say?
Well, just to follow Susan's point, I mean, it's an interesting concept, but what is the bar at this point? Because you'll see the different companies are defining that differently, from just superior anatomic growth or inhibition of anatomic growth to functional performance, to visual acuity, et cetera. I mean, but I agree with generally. I mean, I think Izervay and Syfovre are we're the end of the beginning. I mean, they're moderate. They're modest improvements on what we had before, which was nothing. So it's wide open. Totally agree.
So what I want to end with in the last few minutes that we have, and the audience should know that before we do this, we have discussions and so on and so forth, and usually it's we want to try and give you some kind of tangible advice if we can, if they can, not me. But in talking about this, we always talk about how to get funding and so on, and what the market has looked like and so on and so forth. But the one thing that came up, and Andrew, I want you to kind of take this up and have the others follow, was something that you said that to me was really surprising that I didn't think of today, which is you said that board dynamics, and this is true for all of you, no matter how big you are, if you're private, if you're public, you all have boards of some kind. That board dynamics was the single biggest factor, as far as you're concerned, in getting a good deal done or not. Can you expand on that?
Yeah, I think we were talking about generally factors for success or success factors in deals, and we were talking about, and at least from my experience, if I go back and look at deals that were done successfully, or said another way, deals that didn't turn out so well. One of the traits that they had were sort of dysfunctional boards that had a very difficult time of reaching consensus with conviction and sort of staying the path. And I think it's become, compared to when I first started investment banking, where it's just about the numbers adding up, what you realize over time is there's a lot of social aspects to it as well. And there's a really big difference between companies that have functional boards that can make decisions quickly. They can make them with conviction, and without and sort of hold the line, if you will. Obviously, if there's new information, of course you reassess. But when you see companies that have board dynamics that are sort of flimsy, hard to find sort of the center, don't really communicate effectively what their expectations are, it makes it very difficult. One, for a CEO to clearly run the business, but also from a banker trying to sort of get to a successful outcome. Anybody else in the panel comment on that? You've probably seen that.
It's a great question, and we rarely talk about it. But it is amazingly important, and I think that, in my experience, the best boards have been boards that were not only were they very cohesive, and there was a lot of effort that doesn't come naturally or easily. People have to put effort into that, but the board members also were confident enough to actually just stay out of the way when they weren't required. I mean, this is one of the things that drives me crazy about when you have board members that feel a need to kind of intervene on things or help or do stuff when there's no help required. And frankly, if board members are doing a ton of stuff, there's probably some larger, bigger issue afoot, but sometimes people have a hard time wrapping their head around that. Some board members are good at actually. Pravin, you and I were on a board, so you excelled at doing nothing. But in general, I think if great boards are kind of critical to success. That's for sure true.
Yeah, I think you had one too many COVID boosters. No more for you. Cameron, go ahead.
You're on boards, so.
Yeah, I agree with what you're saying, the criticality, and I would actually expand the discussion beyond just getting a deal done. I think if you look at companies that do well, make decisions well, even attracting investors, it's the board and the culture of the board and the relationship of the board members with the executive team, the CEO. I've had experiences both ways, and I think it just kills a company when the board isn't functional and doesn't support the company the way they need to. I feel actually really strongly about that.
Cameron, you get the last word.
So I'd say, the things that have been the most detrimental is like a unilateral board or like an individual that is such a loud voice that everybody follows, and then somehow, right, it squashes out either debate, healthy debate. So I think that can be one of the more detrimental things. And then just purely from a transaction-related perspective, I think making sure that the board is prepared and understands the options, the market, the dynamics, right, whether or not that's a financing, whether or not that's a strategic transaction, so that you have an idea of where you're going, where opinions are going to come from, so that you can act quickly and you're not stuck and you're not giving bad guidance back to either investors that are putting in new terms or strategics putting in new terms. It's making sure that there is an alignment of, okay, here's what we expect to occur and we're prepared and here's how we're going to react. I think sometimes if you get it, you can get off of these tangents and then all of a sudden things, time is the enemy of all deals. So that's another element.
I want to conclude by just saying that every time I come here every year, I'm just amazed at the creativity, the dedication, and the amount of amazing technology that we see every year. It's just absolutely amazing. And in times ahead, when there may be instability, I think what you've heard is science always wins. And I think what you just heard right now is you have to prepare for success. All of you have boards. All of you need money. Or you can figure out how to, at least try to figure out how to get your house in order for success right now, no matter how big or small you are. But again, science always wins. I hope we depend on each other in these times of instability. I hope this community keeps. And I want to thank Maureen and Craig for creating this community. I think it's phenomenal. The only thing I'm going to do, Maureen and Craig, next time is I'm going to demand that every one of my panelists get raw milk and get chelated before they come here. We'll have a much better discussion. So thank you all. Enjoy the happy hour outside.